Wall Street is crying, inflation is crashing, and Bitcoin is silently dominating. Anthony Pompliano says the bears are dead wrong, and we're going to break it down in today's video. Here we have Anthony Pompliano giving his fiery breakdown on why the economy isn't what you're being told and how Bitcoin is positioned to win bigger than ever. We're going to break down some of his takes and add my own thoughts along the way, so stay tuned.
Watching Bitcoin climb higher feels like watching a train leave without you, but it's not too late. At Drip2BTC, you can grow your Bitcoin like never before. Earn up to 3,000% APR on credit conversions and discounts on Bitcoin purchases. Step 1, buy Bitcoin. Step 2, deposit it. Step 3, let your wallet do the work. Don't miss this chance to change your life. Start today at Drip2BTC.com.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify and operate with integrity and transparency. So as I mentioned, Anthony Pompliano on his own podcast, From the Desk of Anthony Pompliano. I've watched him over the last couple of years, some different interviews. He's been on mainstream media, news outlets and stuff like that. So he's always been a big Bitcoin bull, also a fellow military vet. I believe he was in the Army. So I always like to digest some of his information as well. And this one just is really simple and easy to understand. And he just was basically explaining the contrarian narrative that you might be hearing about how basically the sky is falling, we're going to be hitting inflation and a recession and all this other stuff like that, and how rate cuts are coming in the near future. It's like everything is set up for that to take place. And I'll play that clip from Trump where he's basically saying the exact same thing and has been saying the same thing as well.
Investors have been crying all over national television, and they've been yelling and screaming because of the tariffs and the current economic policies. But I continue to say it. This is all an overreaction, and they're going to look stupid for it. But listen, sometimes you just have to hear it over and over and over again. I recently sat down with Pompliano, and I gave a very clear and concise overview of exactly how I feel about this. Take a listen to how I'm thinking about the market right now.
Is Powell potentially harming the economy by refusing to cut rates?
What have I been telling all you? I've been saying this for weeks now. I was saying this months ago, and people don't want to listen to me. I can only do the best I can. I can just look at the data. I can tell you what I see. And I told you that the entire risk was not high inflation, it was deflation. That we were going to see inflation continue to crash, that we needed to cut interest rates. I'm yelling from the rooftop. I tweet like once every 2 or 3 days. Cut rates now. Inflation is crashing. It was at over 3% in December, according to Trueflation. It now is at 1.4%. That is a 50+% drop in inflation. We must cut rates. On top of that, how many times do I have to say? Tariffs are not inflationary, they're deflationary. Why? Yes, the price of a good goes up, it does not go up the same rate as the tariff. So if you put a 20% tariff on China, which we did in 2018, the average price went up 4%. Didn't go up 20%, went up 4% because there's multiple stops in the supply chain that eat some of that cost. And so the end consumer saw a 4% increase in those products. But why did inflation not show up? We get a lot of stuff from China because when you put the tariffs there, it's a consumption tax. If you tax something, you get less of it. And so naturally people start consuming less of that type of good. And so they either shift their preference to domestically manufactured things or they stop spending as much as they were previously. And so you're seeing the economic slowdown. The risk is actually the economic slowdown. It is not inflation, no matter what they say. All the economists agree. Tariffs are inflationary. Be scared of high inflation. Go read the headlines. These people are dumb and they're wrong. And how do I know that? Because I went and I did the work and I've looked at all the other tariff situations. Every country in the world that's got high tariffs, why don't they have high inflation? Because tariffs are not inflationary. And so now
So that is a very, like I say, contrarian narrative to what you hear everybody else screaming about. But the logic makes a lot of sense and the data makes sense as well. Like you said, you can look at the Trueflation index and see, unless you pay, you can't go back more than 1 year. But you can see that when we were at this time last year, sitting at 3%, we were at another 3% high in December. And like he said, probably when he recorded the video, it was at 1.4. We're sitting today at 1.51. So yes, it has dropped 50%. And that is what Trump was talking about in this clip.
Hasn't come down, but it hasn't gone up much, our interest rates, and we think the Fed should lower the rate. We think that it's a perfect time to lower the rate, and would like to see our chairman be early or on time as opposed to late. Late's not good.
Mr. President,
I don't want to talk about that because I have no intention of firing him.
Mr. President,
there are reports that you're considering doing something for moms across the country, giving them some type of bonus whenever they have a child. Are you considering that? Or
Sounds like a good idea to me. Yeah, please.
So you are right. You have no intention of firing Jerome Powell because here, Economic Brian Hassan a few days ago said that you and legal advisors are studying this idea of possibly doing a fourth term as.
No.
Do you have any plans on doing it?
None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. She could have taken.
So I believe, again, I mentioned this before, that Trump kind of engineered all of this to get the rates lower because they have to refinance and they have the budget coming up as well. So all this is around May, June, if I'm not mistaken. I don't have the data up right now. I forgot to pull that up. But there is trillions of dollars of debt that has to be refinanced, kicked down the curb. And that has to be done. I think the first part is like June, and then there's some more by the end of the year. And again, also, Trump wants to ensure that he can kind of get everything towards this economic boom so that when we get to midterms next year, people will have forgotten about the rocky start that we've had. Remember, he's only been in office now just about 4 months. So there's just been so much taking place in 4 months that it feels like it's a lot longer, so to speak. But when we kind of zoom out and look at Bitcoin over the last 4 months, so you had that rally up to the election. And then once he's in office, that's here in January. So these peaks, January 15th till February, it was kind of riding high on the hog. Everybody was unsure of what was going on. And then he starts executing on his game plan. And people are like, oh shit, he actually did what he said he's going to do. He tariffed everybody. He's cutting expenses. He's firing folks. Like, oh shit. And then now we're kind of heading back out of that. And this is also around the same time now that M2 I showed you for Japan and Europe and China is being stimulated as well. So everything is moving forward. The only piece missing right now is those rate cuts coming from the Fed. But as Pomp mentioned, everything is set up for that. And what Trump is trying to engineer, and I think Jerome Powell will walk back on this and actually do this, but TLDR, Bitcoin will still go up regardless. Like we're already seeing it rise. It just will go up faster if the US basically makes that cut, because that's going to be more liquidity sloshing around and Bitcoin's denominated in US dollar terms in the first place. So it's just more bullish for Bitcoin. We're going to go to this last clip where he's talking to Saifedean Amos, the author of the Bitcoin Standard, and basically giving his take on, the capabilities of Bitcoin and also his outlook on other altcoins. And I've kind of adopted this mindset as well. And it's just basically, you don't need the fastest horse in the race. You just need the horse that's going to outlast the others. And that's Bitcoin, in my opinion. Or as the old saying goes, you don't need a fast horse, you just need a fast horse in general. But I think this is a marathon race, and these other fast horses, these alts and stuff that I'm kind of hedging some bets on, I don't know how long they will be around, if they'll be able to withstand the test of time, the same as Bitcoin. So that's where that 80-20 Raoul Pal thesis comes in as well.
Sat down with Saifedean Amos. He is the author of the Bitcoin Standard, and he's one of my favorite Bitcoiners. I have learned so much from him when it comes to Bitcoin and the global economy. Saifedean has a great way of explaining exactly what's happening with Bitcoin, and this conversation was no different. Here's one of my favorite parts from our conversation. Take a listen.
Ultimately, money is a $300 trillion total addressable market. This is by far the largest market in the world. Nothing comes close. Nothing else is, the total value of, I think the NASDAQ is, I think, around $40 trillion. So the S&P 500, the 500 companies that make up the S&P combined are also, I think, around $40 trillion. So the total addressable market for just money is 5 or 6 or 7 times larger than all of the S&P 500 companies combined. So that's It's just such an enormous magnitude that all of these other use cases, I mean, I'm skeptical that they're going to have any kind of demand. I think they've been mainly used just to pump tokens. But even if we go along with all of those narratives, you know, real estate on the blockchain and blackjack on the blockchain and collectibles on the blockchain and Pokemon cards on the blockchain, even if you're going to give them all of their most bullish scenario possible, it's still a rounding error next to the total addressable market for Bitcoin. For me, it's as inconsequential as somebody saying, I'm going to start painting on dollar bills and I'm going to start selling my dollar bills for more than $1. And so, yeah, maybe you do that. You know, maybe some artist in New York City manages to pull this off and start selling dollar bills for $2 because he paints something nice on them. It's completely and utterly inconsequential to the dollar and the market for the dollar. It's just...
And that kind of was an eye-opener to me. It's like, yeah, there's these other tokens and layers and things of that nature, and I believe they will have some utility, but basically what he's pointing out is that it's a drop in the bucket, you know, compared to the actual market utility of money. And there can be only one money at the end of the day, like sound money basically, and it has to be Bitcoin because everything else has an issuer, can be looked at as a security. Some of them have some proof of work and whatever, but a lot of them were pre-mined or tokens allocated to investors. Bitcoin is the only one, and that was fairly launched to the public first and not to any insiders or things of that nature. And it's the only one that has withstood the test of time, literally going up to $2 trillion asset value in 15 years. No other company in the history of money has done that. So I just don't see an ability for anything else to catch that same level of momentum, because even if you try to kick off another proof of work token, there would be people that would compromise the token at this stage before it got decentralized and robust enough to handle global trade like Bitcoin has. So what he's saying is just like, yeah, the other ones, even if they have value and they are around, it's just going to be a drop in the bucket compared to the utility and use case of money, aka Bitcoin.
A very, very tiny little thing. And yeah, with altcoins, I also think it's really been a couple of rough years for altcoins, and I think it's going to continue that way. I don't see a compelling value accrual narrative for any of the altcoins. Their narratives are novelty, flash in the pan, short term, and you can get marketing behind it for a while. But after a while, you know, the supply keeps going up, and eventually the demand can't keep up, and then the tokens crash. And you know, we've got more than, I think, 30 million tokens at this point, and at least 99.9% of them have gone to zero already against Bitcoin. So it won't be long before the rest goes zero as well.
It's pretty cool.
Yep, and I do believe that long term as well. Like, I don't plan on holding any alts long term. Just in this cycle, I see it as an opportunity to get some multiple X's that I won't get from Bitcoin. But I have definitely moved into that don't fuck this up thesis, where I want to be 80% Bitcoin by the end of this cycle. Right now, I may be 60%, 65%, things of that nature, because I'm still kind of more risk heavy trying to build a bag into Bitcoin. And just a caveat to that, I do believe, like I mentioned, in like the social tokens, like I did with Flapjacks, and that there will be utility in small communities for these things, same way that you have rewards points for businesses that you frequent, or your credit card or airline or whatever. But that's not everybody. So the addressable market, which is what he's talking about, is the entire globe for money, whereas social tokens or rewards tokens is just going to be your community. And that means that, you know, the people in that community can still definitely benefit, but it just still is a drop in the bucket compared to Bitcoin as a whole and money as a whole. Kind of like the analogy you made about selling $1 bills for $2. It's like, yeah, that affects the small people that support that artist in that little area. But outside of that, people are like, it's still $1, right? And it doesn't affect the dollar at all. So let me know what you guys think, what your kind of portfolio strategy is, especially right now where we're sitting at in this market. And also in regards to rate cuts and Bitcoin in a direct correlation to that. You think we'll see them this year? Do you think it even matters at this stage? Just curious to get your take. All right, smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, lift daily and achieve your impossible. See ya.